Having anything in a bank account above the FDIC limit is foolish. No one knows what a bail-in is yet, but that's what we just saw. And when there is a bigger bank that fails, that is bailed in, it will be a religious experience to this country. The whole thing is very frightening, but it's emblematic of just how ill-prepared people are for what's coming because they don't see it coming. And you can't get out of the way of what you don't see coming. This is the beginning of a silver squeeze. And when you realize that the majority of those contracts are all naked short, that's the whole essence of a squeeze. When the price starts to rise and these entities try to cover their naked positions.
Of course, I then discovered as well that, of course, the dollar and the pound and the euro and all these fiat currencies weren't based on anything anymore since they came off the gold standard in 1971.
You have all of these countries trying to find unity, trying to find a common settlement currency and a common payment system for the people, all of which sidesteps the US dollar and the SWIFT system.
Hi, Andy. How you doing?
Jay, good to see you, brother. I feel like I haven't talked to you for a long time. I'm doing great, man. It's great to see you. Hope you are too.
I was out of action there for a little bit with a bit of man flu. Men out there listening to this podcast will understand. The ladies will think we've heard this too many times, but actually,
now there's man flu. There was bird flu, and there's swine flu, and now there's man flu. It just, I suppose, it's better than swine flu.
I don't know about that. I rang my medical insurance. They said it's not covered. I was like, what are you talking about? Anyway, we've got a short amount of time tonight. I've got to actually be in the Houses of Parliament later on today for a presentation. So looking forward to that. So we've got to get a lot packed in. And let's just go straight off the back. Fraud allegations, millions missing, an entire town left grappling with financial chaos. Andy, you know what I'm talking about? A bank in Oklahoma.
Quickly setting the stage. And it's ironic this happened in Oklahoma, Jason, because first of all, go back to the Dodd-Frank Act. They said bank bailouts are illegal, won't ever happen again. Banks would be bailed in, meaning that as a depositor, anything over the FDIC limit, which in and of itself is silly because they only have 148 billion back in 18 trillion in deposits. But they said anytime a bank fails subsequently to 2008, the taxpayer won't be on the hook through bailouts anymore. They will be bailed in by the unsecured general creditors of the bank, the depositors, i.e. last to be paid. And so having anything in a bank account above the FDIC limit is foolish. And it's interesting, Jason, so many people in this country, sophisticated, read people who perhaps read the wrong stuff, have no idea what a bail-in is. They have no idea what money market gating is, which was also put into play during the Dodd-Frank Act, which says if a money market goes down, like they started to do when Lehman Brothers failed, who controlled the money markets, that you're gated. You can't get out. You're locked in. And with $7 trillion in money markets, that's a big red flag. I'd pay close attention to that.
Are you enjoying the show? A quick reminder then to hit the subscribe button so you can be kept up to date about future episodes. Now, back to the show.
But anyways, back to the story.
Yeah, let me just tell people, actually, for those people who might not have heard it, the First National Bank of Lindsay in Oklahoma was closed by the Office of the Comptroller of the Currency on October the 18th, just a few days ago. And the FDIC was named as the receiver. And all insured deposits, that's those under, is it $200,000?
It's 250.
250 were transferred to the First Bank and Trust Co. Duncan, Oklahoma. And insured depositors, the FDIC say, continue to have access to their funds. But the FDIC plans, they state this on their website, to make only 50% of uninsured funds, that's funds that are over $250,000, available starting October the 21st for loans and claims. Customers should contact the FDIC or First Bank Trust & Co. So yeah, they're treating these people with more than $250,000 differently than everybody else. They're treating them the way they said they would. Is that right?
When the bank failed, Silicon and Signature, the representative from Oklahoma, ironically, who was in a subcommittee finance hearing or an inquiry with Janet Yellen, he said, look, you just bailed out these banks. It's illegal according to the Dodd-Frank Act. And she said, yes, we did, but it was an uber majority vote between myself, the president, the FDIC, knock it off. Sorry. And the FOMC, which is the Federal Reserve. So in any case, Minnie.
Yeah, the dog knows all about this. The dog's
I'm really sorry. It's every damn time I get on a podcast, this happens. So in any case, so the representative, hang on one second. Sorry. So the representative from Oklahoma says in this hearing, Miss Secretary, if a bank fails in Oklahoma, will my constituents be made whole too? She says, no, sir, they won't. And that's what this is right here. And I hope people will listen to this. But let's get right to the meat of it. As I know,
previously, people like Silicon Valley Bank were too big to fail. This is the people are saying this bank was too small to care.
But here's the interesting part about it, right? No one knows what a bail-in is yet, but that's what we just saw. And when there is a bigger bank that fails, that is bailed in, it will be a religious experience to this country, because what you just said, they did say that the insured amounts would be available here on Monday. This happened on Friday, a few days ago. And then Monday, 2 days ago, those insured deposits are made available, as the bank was, all the banks that have failed subsequently have been gobbled up by other regional banks or JP Morgan. But this bank, okay, so the, what is the name of the bank? The First Bank and Trust of Duncan, Oklahoma said, we'll take over the insured assets or the deposits. The FDIC said those deposits that are insured will be available, to your point, Monday. They said the uninsured deposits, of which there were 7 million. So this is a small bank. Imagine a bank with a few hundred million in uninsured deposits. They said 50% will be available Monday, right? But what is really not being reported, and this goes to show how horrible our media is, it should be front and center news on every newspaper, on every evening news. They said, however, 50% of the uninsured deposits would be available Monday, but the kicker being the possibility, let's highlight the word possibility, of increasing that amount as assets from the failed bank are sold. Now, if you go back up into the story, it says that the bank had far more liabilities than it did assets. So as they sell the assets of the bank, there's an inequity there. That inequity will be in a pro rata fashion to the depositors. So if you had $1 million in the bank, right, 250,000 is FDIC insurance. That leaves 750. That isn't. Half of 750 is 375. You get that 375 back plus the 250. So you're at 6.25. The other 375, say bye to it. You may get it back. There's a possibility. The FDIC has 4 years to make good on that. You may get it, you may not. So think about that for a moment in terms of the wisdom of keeping your money inside of a bank these days. It's absolutely crazy if you're over the FDIC limit.
Yeah, and what I find frustrating, I don't mind the regulator listening to this, I hope you are in a way, I find it really frustrating that we're, as a regulated company, we have all kinds of processes and systems in place that are imposed upon us by the regulator, who they're supposedly there to protect the customer. And we, every time we talk about purchasing power of gold, we have to put a statement alongside that advertisement that says, goes along the lines of, whilst we know that over the long term, the value of gold goes up, the confidence in fiat currencies goes up and down and generally down, and therefore the value of your gold can go down. Not one bank has to say things like, while the value of your dollars generally goes down, in fact, they've lost nearly 90% of their purchasing power over your lifetime. And by the way, if the bank goes bust, then you might not get all your money back. They don't have those warnings. And yet, as an alternative, as a gold-based alternative, we have to put these notices up. And in fact, they're even recommending that the room you've got to put those on an ad, it ends up covering half the ad with the warning. I just think it's not very fair.
Jason, not only do people not know about bail-ins, but they don't know about gold anymore either. I was watching the news the other day as Bitcoin is roaring. At the time, it was up to almost 69,000. It's come back since then, but gold and silver are making all-time highs. And not a word about gold and silver. Not a word. Of course, they talk about Bitcoin. My point is that this is a market that is climbing up methodically and stealthily. It's not being noticed. And the things that are so important, like wealth preservation in an asset that all the central banks are buying, who know the script, who are the most well-informed, or something as massively as important in an over-leveraged and undercapitalized banking system as what does a bail-in mean and what does money market gating mean. And those are all written in the Dodd-Frank Act. And yet we just saw, in essence, a bail-in. And not a word about the significance of this.
No.
Multiply that times many-fold on a larger bank and watch what happens to people's all of a sudden immediate realization of what gold is, an asset with no counterparty liability.
Yeah. And of course, we've been through this before. I believe the bail-in legislation was passed by the G10, I think, maybe 10 years ago or something like that, maybe longer.
2009,
And actually, yeah, longer. And in 2013, they did their first dry run, which was, of course, back then, Cyprus faced a financial crisis. They needed a bailout from the EU and the IMF. And people in Cyprus with less than 100,000 euros in their account had to pay a one-time tax of 6.75%. And anyone who had more than the 100,000 euros lost 10%. There's a 10% haircut across the board. And depositors were compensated with the equivalent amount in shares in the bank. And that's what effectively bail-in legislation was passed. Why would people pass bail-in legislation if they weren't prepared to use it? All these governments, UK, the EU, the US, passed this legislation. They used it in Cyprus in 2013. Here they are using it again.
And how do you think those shares react when everyone who gets them immediately goes to sell them because they need the cash that was taken from them? Yeah. The whole thing is very frightening, but it's emblematic of just how ill-prepared people are for what's coming because they don't see it coming. And you can't get out of the way of what you don't see coming. And I've been talking a lot lately about Glint in that respect, that to me, it's a far better place to park your money in real money than in a banking system which is undercapitalized and over leveraged. And when you can hold your money in an account in Zurich with BRICS, who I have worked with for 2 decades and have nothing but the greatest of respect for, plus be able to access it in real time with a MasterCard, it makes me wonder, why would anyone, if they knew any better, keep their money in the banks? And then all the folks who think that they're safe in money market accounts, remember when Lehman Brothers failed, they held much of the money market money and everyone tried to yank their money out. That's called breaking the buck, where the money market funds turn upside down. And of the nearly 7 trillion in money markets, it's not just John Q. Public. It's also half of it's institutional, like pension funds and insurance companies and other entities, where if this goes upside down, it's a massive destabilization to the whole marketplace. And that's why they implemented gating legislation, which says, no, you're locked in and you can't get out. And all of those people who have been chasing yield with daily liquidity, instead of leaving it in a bank or buying a year-long CD locked in for the same rate, these are the types of things that these entities do not make these legislations just for kicks. If for not, they see something coming where you have to pivot and change the way things have been to something more like this. This is the first bail-in and not a word from the mainstream. It is a contrarian indicator to the nth degree. When our Fed chairman told us we would see bank consolidations, when everyone's talking about a CBDC, much easier to roll it out to a handful of big commercial banks than to 5,000 regional banks, which are now on the chopping block. One big bank get bailed in, or one big money center no longer allow for redemptions out of your money market because it's gated and it's going to collapse otherwise. You see a bank run of religious proportions. So this is just beginning, and I would say this is the fuse that was just lit on the banking system. As hyperbolic as that sounds, I truly do mean it.
Yeah, I don't want to get our podcast trapped in any kind of algorithms that are trying to stop encouraging content to do with the election. But he's one of the legislators in Oklahoma. He's actually running a Oklahoma Senate interim study on transactional gold. And so I think he's going to get a lot more support after this event. I think it's a wake-up call for people of Oklahoma. And yeah, I wish him all the best with his study.
Me too.
And I think that's it. This is perfect timing for him in their study. I was just talking to him the other day. So big shout out to them. Of course, Utah also just published their study on transactional gold. So
I don't think people understand how much work you're doing on behalf of the people in this country, Jason. I don't think they understand how much effort you've put in with the legislatures and with constant meetings and working so hard, it's driving you to be sick. helping this country go back to its foundation, to its roots of sound money. And you have my sincere admiration and appreciation for it. And I think it's fair for you to have a tip of the hat for that, because yes, you have a wonderful business and an amazing platform, but you're also, it's called mutual benefit. You're benefiting Glint, you're benefiting the shareholders, you're benefiting the people of this country and the constituents of those states. And I hope to heck that it becomes contagious and permeates through many of the states in this country. Your work is admirable, and you have my sincere respect on that, and should have everyone's respect in those states, as far as I'm concerned.
Well, I really appreciate that, Andy. I mean, at the end of the day, I wish I didn't have to do this. 2008 financial crisis. A lot of the young listeners listening to this won't even remember what that was about. We saw the world come to the brink of complete financial chaos and collapse of the banking system. And it was then that I realized that a bank isn't a risk-free deposit of funds. And I thought there's got to be a choice. Of course, I then discovered as well that, of course, the dollar and the pound and the euro and all these fiat currencies weren't based on anything anymore since they came off the gold standard in 1971. I thought, why don't we give everybody their own personal gold standard? Why don't we create a bottom-up returns to sound money? Why don't we give people a choice? And to be honest, Andy, this is like a vocation for me. I wish I didn't have to do it. I wish I didn't have to have the stress. But someone's got to do it. We've done it, and I'm very happy to be doing it. And because I believe everyone has an equal opportunity to prosper, and I believe that it's a prudent thing to give people a choice. And this is what, of course, the legislators across the world and certainly across the US, in 20 US states now, as they've got this groundswell of interest and support for these legislators they have their jobs, they have their 9-to-5 jobs or their own businesses, which they have to work at, and they're doing this because they think they're doing the legislative work as well. In addition to that, I think they are heroes. People like Ken Ivory in Utah, people like Bullard in Oklahoma. So big shout out to them. They're also the big true heroes out there. But thank you. I really appreciate
man.
that.
And I mean it. And I'm sincere about that.
Yeah, and people who are interested in this, if you're interested in this and you're listening to this and you're worried about things, go and support your local legislators to get this legislation passed. I think it's transactionalgold.com. Let's make sure there's a link, Ray, in the description below for that later. So listen, we're rapidly running through things. Let's get on to the next thing, which is silver, of course. And silver prices potentially set to explode. Analysts predict a doubling in the value. What do you think about that, Andy?
It's interesting. Silver is up 11.8 last I looked at. It's down a little bit today, but it's up about 12% over the last 30 days. It's outpriced any other commodity or any other precious metal. Interestingly enough, it's at all-time highs right now against the Indian rupee. Didn't know that until just recently. And, India has imported between 800 and 900 million ounces over the last few years. India is massively accumulating silver. And when you talk about the setup for silver, I don't know that there's an asset that I would argue has anywhere near its potential, and its distortions largely are a function of the short position on COMEX and the LBMA. If we look at the LBMA as an example, they admit to trading 292 million ounces per day on average. They only have 800 million ounces in the vaults, of which 500 million belong to the ETF. So they have 300 million, let's call that the float. Of that 300 million, they say they trade 291 million a day, every day. However, they say that those numbers are as much as 10 times understated because they only post the final settlement numbers, not all the trades throughout the day to get there, which would mean, in essence, they're trading 2.9 billion ounces of silver per day. That's 3.5 times global annual mine supply. 90% of those trades are paper trades, naked paper trades by the bullion banks. It is estimated, and again, the LBMA is an over-the-counter market. There is no central exchange. There's not the transparency. There's not the regulation that we have on COMEX. On COMEX, you have 8 banks that hold the largest concentrated short position of any commodity traded on COMEX. It's in silver ever, and it's about 800 million ounces short on COMEX, right? But the LBMA, they estimate to be between 4 and 6 billion. And I can't give you the exact numbers because there's a lack of transparency, but between 4 and 6 billion ounces naked short, right? So in the last few days, as silver's gone up $3, that's between 12 and 18 billion in losses just on the LBMA on those banks, let alone the 800 million ounces short on COMEX, which are the pretty much the same partners in crime. They have been holding down the paper price of silver for a myriad of reasons. And maybe on our next podcast, when we have more time, I will tell you why I truly believe they've been holding it down and try to back it up with some empirical evidence. But suffice it to say, you have 8 banks or 8 to 10 Western banks that are as stupid as a mud wall in a rainstorm, trying to hold back the price of silver in a period of time where it closed through 32.50, which is a resistance level, butted up against 35, got through it for a second. If we close above 35, now it's down a bit today. We close above 35, there's nary any resistance between it and 50. The potential for silver to outperform is better than any asset I've ever seen in my life as an increase in demand, green, digital, electrical, electronic, military. Now, this is the key that I want to talk about when we have more time. The military industrials complex need for silver. When we have more time, I'll enlighten you with that theory. But at the same time, we have... I'm sorry?
Let's do it. Let's make sure the next episode is a complete session on silver. I think that could be
100%.
exciting. Glint's got some exciting news about silver as well. You can explain it. You can explain the demand, etc. So next week, viewers, there's going to be some exciting stuff about silver. Let's looking forward to that, Andy.
100%. And just to finish my thought, and I'll roll with that next time, you have a massive expansion in uses from industrial to military to monetary. At the same time, we have a depletion in supply. In the ground, it's coming out of the ground right now at 7-1. It's priced at about 80-1. But that chart that you just pulled up there was a 40-year cup and handle, the most bullish of technical formations, and one that is 40 years long, has massive power behind it. So yes, this is as big of a bullish formation, along with all of the fundamentals we just talked about, that I've ever seen in finance. So yes, I think that report is spot on. This is the beginning of a silver squeeze. And when you realize that the majority of those contracts are all naked short, that's the whole essence of a squeeze. When the price starts to rise and these entities try to cover their naked positions, it's not as easily said as done these days when silver physically is becoming so hard to get at that level.
Thank you, Andy. That's great. Look, on to the next subject, the last subject. As I said, we're going to keep the podcast short today. With 45% of the world's population represented by BRICS, is it reshaping global economics? Is the G20 under threat? BRICS just got a lot more powerful, didn't it?
Yeah, it did. And what I think they're trying to show right now during this meeting, it's interesting. A lot of this, I would call it marketing to the West. But what I think they're trying to show, there are two things. One, BRICS pay. We'll talk about that in a moment. But what they have really made public, two things jumped out to me. One, you have Iran and Saudi Arabia who have agreed to joint naval exercises. This is Sunni and Shiite who have hated each other forever, but now in the name of a common good, we are putting our differences aside, mending fences, and finding unity through cooperation. Same thing is true today. Modi and Xi Jinping are meeting on the sidelines, and they said that they have already agreed to peacefully deal with the border issue and to mend their fences and to find unity through peace and cooperation. What they're trying to show the world is that they got their you-know-what together, and that they are trying to be formidable and not at each other's throats, but to be complementary and coordinated and unified. And they're very motivated in doing this. So the other thing that they're talking about, as we know, 30 plus countries are in attendance. And those are all countries that have either formally applied or have expressed interest on top of the 10 that are there.
Is because originally BRICS stood for Brazil, Russia, India, China, and South Africa. But as you said, it's now growing into something completely different.
Much, much bigger. And they are talking about BRICS Pay. Now, we've talked a lot about the unit settlement token, which is for the government to they want to trade in local currencies, but settle energy and oil and these types of commodities with the BRICS token, which they said Dilma Rousseff, the former president of Brazil, who is now going to be the next presidency next year. And she said, we've agreed in principle to a new settlement currency called the unit, which will be settled in gold, or 40% gold backed rather. That's for the governments. Now, they just came out with BRICS Pay, which is for the people. And it allows any of these countries with their own currency, either through a credit card or on their phone app, to transact seamlessly without having to convert to, like when I come to visit you, I don't have to convert to, to pounds. I can use if this was Russia coming from China, you can use your BRICS card or your BRICS Pay app, and bang, you can buy anything anywhere, and it seamlessly converts immediately. It's a
and
neat
presumably
concept.
it's not going through any Western systems. It's not going
No,
through
all of this
Mastercard,
stuff
Visa.
is,
It's not going
that's
through.
correct. That is correct. It is, there are credit cards attached to it. So there is a little bit of business going on between the West, and the businesses can do this, the governments can't. And you'll see banks start to chime in. Goldman Sachs and JP Morgan will probably find ways to do business here, but this is straddling of the fence. The bottom line is that the unit at this point, which is traded over Mbridge, is not compatible with US dollars. Mbridge is not. And so, yes, this is this whole meeting, if in my mind, is you have all of these countries trying to find unity, trying to find a common settlement currency and a common payment system for the people, all of which sidesteps the US dollar and the SWIFT system, and letting these countries trade in their own local currencies and stand on their own 2 feet.
Yeah, we've been following this a long time. You've been talking about it a lot. I hadn't really seen any evidence that anything was happening, but everyone was talking about it. People in the know were talking about it. And of course, here we are with the conference actually happening, when suddenly rolling out this payment system. It seems that there's complete validation. This is definitely happening. Even the BBC reporting on it now. And of course, for the time being, Russia and Putin are avoiding overtly critical narratives. They're not talking out loud about limiting the dollar or the trade with the West. But you can see here how much of a threat this is to the G20 and to the Western financial system and the dollar, I think.
Yeah, look at all these. Supposedly, the West is sanctioning Russia, and they're supposed to be hurting so bad, but the ruble's doing good. Their economy's doing just fine. And look at all of these countries. They're there. They're in Russia. So the sanctions are not having the effects that they are supposed to have. And this is something that should not be underestimated or taken lightly. And again, all of these nations, in my mind, have transitioned to what I call Bretton Woods 3. I've adopted that from Zoltan Pozsar. Bretton Woods 1, when we took over for the pound sterling at the end of World War II. Bretton Woods 2, loosely, when the Saudis said, and OPEC, that they would value oil globally in dollars and take the excess and put it in treasuries. And when the Saudis didn't re-up the exclusivity deal in August, said, yeah, we'll take dollars, but we're going to take other things too. That ended Bretton Woods 2, and we are now in Bretton Woods 3, a system about who's got the commodities. And gold and silver are central focus to the BRICS nations as a way of finding a truth and trust and legitimacy, even in the way that contracts or bars are sold on the Shanghai Gold Exchange. If you buy a silver bar to trade on the Shanghai Gold Metals Exchange, first you have to buy the bar from one of the 6 or 7 approved refineries, and then they laser etch a serial number on the bar that is dedicated to a certificate. It provides legitimacy. And these are the things lacking in the Western system, which are fractionally based versus a one-to-one relationship here. Things are going to start to get very interesting with the BRICS. I don't expect there to be anything earth-shattering, but it is a trend in motion that is continuing to gain legitimacy in size and military might and GDP, in trade routes, in commodity production and refining, in every way. And this is no different. This is just more a validation of that.
Yeah. Okay, listen, I think that's all we've got time for today. Remember to subscribe, because next week we're going to be talking about silver. We're going to be talking about some news about glint in relation to silver. Andy's going to be explaining silver in a lot more depth for you. So if you're really interested in that, make sure you subscribe, because then you'll be alerted when the episode gets published. And of course, we welcome your comments. Please put your comments in underneath in the video below. And of course, we might very well talk about some of those comments. So until next week, I hope you have a good week. And Andy, thank you. It's been great talking again this week, isn't it?
It is. And I was going to say, don't go, Jason. I need a friend. But I know you have to be in Parliament, and I don't think they have a sense of humor for guys that are late. So I'm going to let you run. Always good to see you, brother. Look forward to picking up where we left off next week. Yeah. And good luck today in Parliament. Hope it goes well.
Goodbye from me, Jason Cousins, and
me, Andy Scheckman. Sorry, that was. See you all next week.